Good afternoon, traders. This is Tony D from easyMarkets in Sydney. Update for you today. We have some big news for the week, probably the biggest in terms of fundamental data coming out today. We've got the UK wage data, which is quite important. One of the highlights of the UK economy is the unemployment rate at 4.2%, and also the wage inflation they have there is the envy of the world, with well above 2%, currently at 2.7. Forecast for this meeting and for this release today. That's the main reason the Bank of England was, expecting to raise rates, because wage inflation is a precursor to normal inflation. So high wage inflation really does have a strong push on inflation in general. And if that was to continue, then inflation generally comes along down the path, regardless of what oil and some of those transitory natures that do affect inflation from the outside do. Wage inflation is real inflation and something which sticks around for a while. And so that's what they've got over there. If that remains, then it could help the pound, which has been in a holding pattern for almost a week now, between 135 and 136, break out one way or the other. US dollar did reclaim control last night though, and if you're looking at dollar index, you can see that nice little dip buy here. And on the euro, rejected at 120, nice reversal candle as well. And dollar yen, as we come to air, is testing 110 at the beginning of the European session. Now 110 hasn't been broken yet by dollar yen, tested third time now, probably going to break this time given the fact we're testing 110 when the euro is nowhere near its lows, right? So, but regardless of what it does right now, the big news later tonight is US retail sales. So a break here does not mean it's definitely going higher. If you were to break above 110 and then have weak retail sales, then we're just going to have a reversal pattern and a dangerous looking candle on the dollar yen above 110. So it is the next few hours is a little bit more dangerous than usual. It makes it harder as a trader when you do have technical breaks before major news, because if it was to be strong numbers, and we were running into this numbers from the US tonight at around 110.20, and the numbers coming good, then we're going to be closer to 111 than 110 before you have a chance really to get in. And so this is the benefit of getting into uptrends on dips, is that you don't have that problem. Yeah. So those who are struggling to get into dollar yen, well, today anyway, because the market looks like it's going one way, is the opportunity to buy it more safely was a couple of days ago, and that's something to keep in mind when you're looking at trend trading in general. Those corrections are the main events. So we had a chance Monday night, Tuesday morning, to sort of get involved in some of these trends. All right, the Aussie dollar is reversed with the rest of the pairs and is looking vulnerable. So really, the US dollar is in control, and it's only the pound which is putting up a little bit of fight. So this puts all the pound crosses in play. If you were to get solid UK data tonight and solid US data, then things like pound yen would outperform, euro pound would outperform, pound Aussie would outperform, and those were some of the pairs that were doing really well in the first few months of this year, but have been damaged greatly by the pound sell-off since the Bank of England delayed their rate hikes. The negative side of the pound and the bear case is that the Brexit negotiations haven't been finalised yet. That is true, but there's only so much you can sell on the same story on uncertainty, and so without an actual breakdown of Brexit talks, it's well known and well priced in that there's uncertainty here. Yeah, it would be a reason to sell on uncertainty if we were much higher. But being at the lows, uncertainty in itself is not negative. It just lets the trend continue a little easier than normal. So uncertainty about Brexit just delays buying a little bit on the pound. So any news that gets a resolution one way or the other regarding EU customs at this point may be seen as positive, even if it's not of the agreement which EU wants. Some sort of certainty is what the UK businesses are looking for, and so that the deadline set by the EU has been for the June. UK is a little bit more open-minded about deadlines, thinking it's a bit of an artificial deadline, but it could just be a pressuring tactic to try and get them to move along, because it has been quite a slow process, as there's been a lot of internal debate in the UK Conservative Party about which what sort of deal they're looking for. All right, so the pound is an interesting one at the moment, and that UK data tonight is going to be in play. We are quite low. We haven't had a really big squeeze, but there is still some negative grey clouds on the horizon that are keeping things a little bit at bay. So if you do see a squeeze higher today, just remember that it's not out of the woods at all yet. All right, guys, we'll be back tomorrow with an update and see what happened after the data. And we'll talk a little bit more about the rest of the week and the US dollar trend tomorrow.